So Chargepoint stock will explode when? When in this video we're going to look at when is the likeliest moment for Chargepoint to explode, the stock price to go up. My name is Marco, so let's dive straight into it. So just for information, on this channel we look at stocks using numbers, using hard facts. So with this way we know that it's not just my opinion. I mean, this is my opinion, not financial advice, but it's very likely that it's gonna become true. So we have to understand when Chargepoint is gonna become profitable. That will make the possibility of Chargepoint to become a much bigger company in terms of stock and so forth. So we need to understand that Chargepoint wants to be recognized as a SaaS company. So software as a service. So there is another thing that we need to look at, and that's very important. That Chargepoint reported an adjusted gross profit of 27%. Now this 27% has got a very important detail. That is, it's made up of the hardware gross margin that was 15%, whilst the subscription gross margin that was 41%. So we see that the subscription part is what made the most of it, like it really propped up the gross margin. And so when is this company gonna become profitable? Well, I'm gonna show you in just a second, but what's really important is to understand that we cannot just look at when it's gonna be profitable. We need to obviously anticipate that and understand what Wall Street thinks about this stock, because we need to buy ahead of it. We cannot just buy when it's time, when it's probably already on its way, maybe very close to become profitable. Let's see what analysts think of this stock. And this is Wall Street Journal. So Wall Street Journal for Chargepoint Holdings. Now, the little disclaimer here, Chargepoint is a very speculative play, because at the time of recording, not profitable. We are looking later at when it's going to be profitable. So do not just dive all your savings into it. Make sure that you have a diversified portfolio. On this channel, we look at that as well. So looking at the basically the buy ratings for Chargepoint, well, we see that there is very much a lot of buy ratings. And currently, it's mostly buy ratings. We have 11 buy ratings. And buy was basically a lot even 3 months ago. So overall, we see that way more buy there are than hold, and there are absolutely no sell at all. And now for the bit that you were looking forward to, let's see when this company will become profitable. So in terms of projections, we see that at the time of recording, we are obviously not profitable. It won't be profitable in 2022, 2023, 2024. We are probably gonna be very close to break even in 2025, but finally we should become profitable in 2026. And so is it gonna be all smooth sailing from now to 2026? Well, there are two things we need to look at to make sure that we don't buy it and then the stock drops even further from the all-time high. Well, the first thing that we're gonna look at is obviously the amount of cash. You don't want the company to go bust. And this is, guess what? This is the amount of cash that is on hand at the time of recording. So we see that they have received a lot of cash that was mostly from the big merger. This is a SPAC. So what we see now is that the amount of cash has actually gone dwindling down quite a lot. They had a big expense, which was when they bought another company, and so that cost them quite a lot of money. They paid it over 200 million, so that's a big expense. And so it was $205 million. Now based on that, we see that they have another $365 million. Now this company has got the kind of bad habit, I must say, to actually buy his own common stock. So they actually done some repurchasing, but they also issued some of their own stock. So that is very interesting. But overall, we see that they burn the amount of basically about $80 million. So what I'm expecting them is to issue some more common stock, which obviously is not going to be great for us investors, but at least it's going to make them survive until they become profitable. And as I promised you, there is a second factor that is very important, and it's not just about Chargepoint, it's about the whole market. Why is Chargepoint down? Well, it's very simple. It's called the Federal Reserve. Now, the Federal Reserve is actually in charge of changing interest rates, and it's gonna now in the near future actually increase the and we're talking about the Fed, right? So they will increase the interest rates for the US loans and mortgages and everything, and at the moment they're really rock bottom. You cannot go any lower than that, but that is in response of inflation and what is expected to happen. And this is very much what is going to be the driver. The inflation is the driver for increasing the interest rates, and then when the inflation will be low enough, they will be able to reduce the interest rates. And so that is the moment, that's probably the best moment to buy some more Chargepoint. So looking at this graph, which is what they are expecting in terms of inflation. Now, we don't have any more data after the end of 2023, but what is definitely, what seems to be the best thing to do is to go with these numbers. So we see that inflation will actually peak at the beginning of 2022. We are very close to it, and then it should go down. Now, this drop is very much related to things that might change very soon. We are looking at the supply chain issues, and we are gonna look at these kind of things on this channel as well. But mostly, you need to understand that if you want to stay up to date on this channel, we make videos on the whole market and also on stocks like Chargepoint or news on Chargepoint. But it's important to understand that this inflation curve might change a lot. And so we need to stay up to date with that, keep looking at the CPI rates. And so basically, looking at this chart, we see that even at the end of 2023, the inflation will be above the Fed target, which was 2% or 2.5%. Well, like if you look at 2.5%, we should really hit it by 2023. Now, that is obviously very optimistic, but before then, they will have to increase interest rate. So in just a second, I'm gonna tell you my strategy. So my strategy is actually very simple. I know that the company might be able to become profitable by 2026. We need to pay attention to their earnings because they might get closer to profitability sooner rather than later. So that's my strategy, to always look at the earnings, which we talked about on this channel as well, and we will talk about the next earnings. But at the same time, it's very important to also look at the interest rates. And by the way, I've already bought some Chargepoint in my portfolio. If you want to stay up to date with what I buy and sell, I have a Patreon group and a Discord group. If you want to join it, you have to join my Patreon, and that's just $3 a month. So link in the description below. And so thank you for watching, and I'll see you in my next video.